Welcome to the Traders Market Intelligence Report brought to you by WealthBuildersHQ.com. This update is for Monday, February, not January longer, February 3rd, 2025. Hope you're having a fantastic day. Hope it's a great trading day for you. As we get started, keep in mind everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, make sure it fits your own personal risk profile and risk tolerance. All right, let's go ahead and get that out of the way. And I want to talk about S&P, talk about pop music. No, guys, I mean, look at what's going on here. Right? Let's activate the chart. Okay. So we had a previous all-time high was right here a couple of weeks back. Was at the end of December. Then we hit a new all-time high just about a week ago. We had a nice pullback, good run. Today we gap up, we go, we run right into the Fibit. We get above it a little bit. We don't quite make it to that 61.28 to the previous all-time high we had. And we pull back. Why? Why did we have such a massive move to the downside today? And we're down 38 points. We went from being a great bullish bias all the way down to being bullish neutral, right? And we've got about 20 minutes left till the market closes. So I did a little research on a couple of different things, but realized tomorrow the S&P 500 is getting smacked around today because tomorrow is when tariffs are supposed to kick in. Mexico, Canada, and China. Right? There's a lot of fear and a lot of uncertainty. Uncertainty is probably the best word. I don't know if fear is it. I think uncertainty. Is Mexico going to retaliate back or Canada retaliate back on gas? We're going to see our oil prices go up when we're looking for them to go down. It's very possible. And I think that's why the market took the hit that it did. If we look on an intraday basis today, let's go to a 5-minute chart. We did well. Look, we were up here. This is at 11:15. A little bit lower here on this swing high at 12:35. And then right here at 120, we just collapsed. We were in from this 120 candle, we're in a bearish thrusting pattern, right? Just a clean bearish thrusting pattern. Straight down, little hiccups in there along the way, but overall, it is not looking too strong at all to the upside. So with that, we're closing potentially, because we still have, again, about 15 minutes up. We're closing what looks like in a bullish neutral bias rank of 3. You got to let it settle out and see what happens, where it happens right now, where it ends up. But overall, there are some concerns in the market out there. There's some stuff with Apple. There's sector performances, some inflation data that came out. You know, all of these things may lead into it, but the inflation data came out early this morning. So that didn't have anything to do with it, right? Apple's concerns for initial earnings came out early. That had nothing to do with it, right? It didn't happen at 1 o'clock the way that it showed there when it fell apart, right? These all came out earlier. The announcements were really based on, oh my goodness, he's really going to do the tariffs, right? We'll see what happens come Monday. You know, you may want to go bear today. That really is going to be an aggressive risk call if you decide to take a direction because we're guessing, right? You have an opinion, and that's the extent of it. Right, if we look at the VIX, fear, we're going to be up a little bit today. Not surprising. We're up $1.19. We're at 17.09. The higher level of our yellow range is 18. So it's 18 to 29. So we're good in there. Overall, not too shabby at all. You know, we're still fairly low. Yeah, would I like it back at the 14.5? Yeah, I would. But overall, again, not too shabby whatsoever, right? So what are we looking for on the S&P 500? Well, to the downside, guys, we've got the 6,007 down to the 59.91 zone in here. So you got the 6,007, the 6,000 right here, and the 59.90.58, which is part of our ABC pattern. That's the 618, okay? On the upside, we need to get back above that 60.60. Yesterday was great, getting above the recent swing high. Today was great, we got above the recent swing high. I'm not throwing in the towel here, folks. We just need to see what happens come next week. How is the market going to handle all of this, right? Do we have some economic reports to contend with next week? We do, actually. Let's go look at that. Let me bring those over. Open it up and let's see. All right, so here we are, all of next week, right? So we have Monday. You got OPEC meeting all day on Monday. Could affect energy prices. Now, depending on how Canada responds, since we're getting so much of our oil from Canada, depending on how Canada responds to tariffs, if they try to raise the tariffs on their end as well into our energy that's coming in, you may see OPEC play some games because of that. That could go from orange to red just because of that announcement over the weekend alone. 10 o'clock is PMI for ISM on Monday. Tuesday is JOLTS. It's also 10 o'clock. Wednesday, a lot of reports. We've got only one that's pre-market. The ISM for PMI is coming out at 10 o'clock on Wednesday. Crude oil on Wednesday as well, 10:30. Thursday, we've got Waller speaking from the FOMC. I don't really care. Unemployment in the morning. Friday, average hourly earnings, non-farm payroll, unemployment report. They're all the same report. They're all part of the same data that's coming out, right? And there you have it, ladies and gentlemen. Have a great rest of your day, and I will see all of you at our next update. Bye for now.